Welcome back from that break, and it's good to know you are still with us on the program this morning. And it has been Good Morning Abuja showing on the Unity station. And on to my first conversation this morning, I have with me Comrade Haruna Brimo. He is a public affairs analyst and he's going to do justice on tax. Welcome to the program.
Thank you very much. Always my pleasure to be here.
Yes. Well, let's start this way for the benefit of the unaware. What are taxes?
Yeah, I think for the real benefit of the program,
yes,
we need to define tax.
Yes.
Taxation and taxes. Yeah, tax is a compulsory levy or payment that's expected of citizens, corporate entities, and related outfits in any country and any society. Payment to government rather, which help the government in turn as a source of revenue to drive their programs. That is the definition of tax. Taxation is the entire process that is involved in the administration of these taxes, creation of the respective boards, laws that guide and regulate these taxes, the collection process, and the administration of this process. That is taxation. Taxes on its own, if I have defined taxes now become every form of levies that is compulsory and compulsion upon the citizens and outfit governments, outfit of businesses that operate in a particular society regulated by governments. Across the three tiers, in Nigeria we are operating a federal form of government. We have these federal, states, and local government. So across the tiers of government comes about the respective taxes as enabled by the respective laws. Like the federal laws regulate some kind of taxes, the state's laws have their own regulations on their kind of taxes that are paid within the state levels, and the local government laws also. So some are called bylaws, some are acts of parliament. There are some tax laws that have been enacted by pronouncement from the act of parliament. There are some bills that have been passed to laws, a whole lot like that, all just towards administration of tax and taxes in Nigeria.
Thank you very much for doing justice to taxation, who is to pay tax and who is not to pay tax. In your definition, you talk about all citizens to the government.
Yeah.
Now, who and who is to pay tax?
Yeah. Tax, actually, we have what is called taxable income.
Okay.
Every income earner ought to pay tax.
Okay. Every
profit any entity ought to pay tax.
Okay.
We have the tax brackets.
Okay.
Those within a particular tax brackets, they are defined as those who are earning income and unearned income. We have the earned income, we have the unearned income.
Okay.
Earned income and the income you earn from your direct wages, direct involvement in the ventures that gives you wages and salaries. Why would we have the unearned income, which account for form of compensation, bonuses that you may have, and dividends from your investment in other businesses, even as you are working, some kind of gratification and gifts that falls within outside the relief, because there are some exempted income. There are some there are some unearned income that are exempted from tax and taxes, and there are some that fall within the bracket that you must account for it. They form part of your chargeable income, and it's upon this chargeable income you now use the laws to break it down as to how you can pay. And if I will for the benefit of education and this program, who is to pay tax varies according to the classes of tax.
Okay, because we are going there.
Yeah, we have the taxes paid by companies and business outfits, regulated separately by the laws of the Federal Republic of Nigeria. We have the taxes that are paid by individuals and also be regulated by laws. The taxes based that are paid by companies and business outfit is regulated by the Company Income Tax Act as amended 2000, and the last amendment, I think before the 2021 Financial Act, 2011, 2004, 2011, which provided for the ways and manner through which companies should be taxed within some specified rates between 20 to 30% on accessible profits, the profit of these companies. That is another class for companies and businesses. We now come to the personal income tax, which is PITA. Personal Income Tax Act as amended 2015 talks about the taxes upon the personal incomes of individual, like the ones I was trying to explain, from your salaries, your wages, and other earnings that are on earned, both the earned income and the unearned income, you know. And also within the Company Income Tax Act, there are provisions in section 80 that has to do with, as amended, that has to do with some specific companies, like the petroleum industry, for example. We have the petroleum PPT, Petroleum Profit Tax Act, as amended, that gives specific provision. You don't treat the way you treat regular companies as the way you treat the petroleum profits. There are specific provision on that. And there is the 1919 Capital Gain Tax Act, CGT. What is capital gain? Taxes that arise from the gains from the capital involvements of any business. For example, disposal of asset of a business. You may dispose an asset, and after calculation, you know that you have made a gain, because the asset is a particular asset, like this chair, is supposed to have a useful life. If the useful life is 5 years, for example, after 5 years, that means it's fully depreciated. So the scrap value, and by tax, is by accounting, is zero value, because it has been fully depreciated. You bought it for 50,000 naira, and after 5 years, 10,000 naira per year. You know, after 5 years, it's assumed that the asset have lived its useful life, and the NBV, the net book value of such a property, is zero. You understand? But the tax has created an allowance, the difference between taxation and accounting. Accounting recognizes depreciation, taxation recognizes capital allowance. But from the tax perspective, this asset is earning a capital allowance. You don't give it zero. There's an allowance you can still give, maybe 10 or 5 as value. But if you now dispose this asset off after 5 years, it still has a scrap value, and you now sell it for, let's say, 10,000 naira. In your book, accounting consign, you have written it off as zero, because it has been fully utilized. It has served its useful life. But now you still sold the asset for 10,000 naira.
So are you still going to pay tax
on
that?
Of course, there's a capital gain now, because in the books it's already zero. Do you understand? All you now need to do, the expenses you may have incurred in disposing of that asset, maybe you took it to GG or OLS, you pay them some charges to help you display it in their platform, and you sold it off. You know, you remove those charges, those small incremental costs. So, and the difference becomes the profit you make in the disposal of that asset. So there's capital gain taxes, and this capital gain taxes is also affecting. It's an aspect of, it's an indirect. It's also indirectly entered the property taxes, investment in houses, all this investment, trading off of housing from one hand to another. They ensure capital gain. I build this house for XYZ amount. After 5 years or 10 years, I'm selling the house, and I'm selling the house at triple the amount I built it.
Welcome, Reid. I feel I'm in the classroom and I'm learning a lot this morning. You are going to throw more light on different types of taxes, but before then, how are taxes calculated?
Yeah, like I talked about the company, there are rates that are stipulated for calculation of taxes. For companies, I think it's between 20 to 30%, depending on the turnover. Yeah, companies that are less than 100 million or more than 100 million and above, as provided by the Financial Act of 2021 by the federal government, just to create a relief for businesses to survive the the President Muhammadu Buhari-led administration have to come up with a robust financial act to reduce this tax wages on companies. So from 100 million above, I think it's around 20-25% now.
Okay.
Before it's up to be 30%. You know, from 25 million, from 10 to 25 million, you are fully exempted. Because before now, it was 20%. When your turnover of the business is from 25 million, you should pay 20%. Okay. But in the good interest of the president, feel like there are some things you need to streamline. And also, like we have the value-added tax, which is an aspect of indirect tax. We have two types of tax: direct taxes and indirect taxes. Okay. Direct taxes are taxes that affect directly on our profit, our salaries. Indirect taxes are those taxes we pay that we may not feel they don't directly affect us, but you don't know you have paid for it. Wow. Yeah, it actually started in the 17th to 18th century from Paris in France, because the European business revolution brought about consumption of luxury items. So they now included a form of tax called the ad valorem tax, which is now called value-added tax. Okay. Yeah, the Latin word or the French word is ad valorem tax. They include it. Some country they call it sales tax. You don't really feel it. You just go to the shop now. I want to buy a television. You just pay for it. You don't know that there's an indirect tax that is included in the price they've given to you.
From this your explanation, I think you've done justice to when to pay tax and different types of taxes. But before I let you go, the implications in case of default.
Yeah, it's jailable.
Wow.
Yeah, absolutely. We have a tax avoidance and tax evasion. Okay. Either you underpay or you refuse to pay. Okay. You know, some underpay, some avoid to pay. Okay. You know, some evade tax, some avoid tax. But in both circumstances, it's a jailable offense. Wow. It's a civic duty and responsibility upon every citizen to be, especially the taxable citizen, to on its own. That's why I say a civic duty. You walk up to your next inland revenue service for those in the state. If you have a company, federal inland revenue, walk up to there, get a form or get a tax consultant to be filing for you. We are going to, maybe we will start from NTA if there is no operational. That's why we are here to help streamline things. Okay. You know, you file for your personal income tax. Any attempt not to do that, the implication is you are not performing your duty. You don't have the right to demand your rights from the government. Okay. And let me use the opportunity to tell Nigerians, it's an opportunity to enlighten Nigeria. You do your justice, or you do justice to your civic duties and responsibility before demanding your rights from government. Okay. One comes before the other. Okay. You don't demand rights from government because through tax you contribute to the coffers of government. Okay. That's what government will use to provide you basic amenities, which are your basic rights. You need security. You said I'm entitled to security, and you know you are not paying taxes. And we are saying security is underfunded, and you know you are not paying taxes. The companies are not paying, some are avoiding, some are evading. The companies, they have not done their corporate responsibility. You as an individual, you have not done your duty, civic duty as expected. It's non-negotiable. It's part of your patriotism. Is non-negotiable. There's no conditionality to it. So if you don't do it, it's jailable.
Well, let me take this as your final word. And we have heard the implication of defaulters. If you fail to pay your tax, it is jailable. Thank you, Comrade Haruna Brimo, for coming on the program this morning to talk to us on what we need to know about taxes, the benefits, where to pay tax, different types of taxes. Thank you very much, and we hope that when we call on you again, you will come back to educate
it's
more
my pleasure
on that. Yes.
Thank you very much.
Yes, we've been speaking with Comrade Haruna Brimo. He is a public affairs analyst, and he has told us what tax is all about, the benefit, where to pay taxes, the types, and of course the implication. Now let's go on a quick break on Today in History. Stay with us.